Hello and welcome to Volland Refined. I am Jason, the Wizard of Ops. All day with me today is Hunter, doing any kind of live stream and zero DTE updates. It showcases all the brand new features available at VolLand with a wide range of special guest appearances during our 8 live segments. So if you're joining us on YouTube, you can go to the description of this video and get the links to all 8 segments. With us right now is Mr. Oliver Sparring, a good friend of Volland's and a good friend of mine. I love talking to him. He's been working as an independent trader on the market since 2011. And after studying music, he completed an apprenticeship as a precious metals dealer, which is how he first came into contact with the stock market. Oliver describes himself as not a natural trading talent. It took several years and various training courses to find the right path to consistent profitability in trading. An expert is someone who has made every conceivable mistake themselves. That makes me a better trader. Yeah, I call it the school of hard knocks, right? You got to pay your tuition to the school of hard knocks.
I'm pretty sure that's a story many of us can share, isn't it?
Over the years, he has explored a wide variety of trading styles and disciplines and can draw on a wealth of experience in stock market trading. In 2021, he founded his own trading school, the Sparring Investment Academy. It is now known as the TradeNeon Academy. So together with his team, Oliver teaches successful investing, part-time swing trading, and professional order book day trading. So let's get started. Before we talk to Oliver, we had a little bit of a sell-off, Hunter. What did you say?
Going back to our last segment, we've had probably one of the largest orders in the ES. I took a brief picture of it if you guys want to see it. Yep. It was a, let's see, I can just open this link and pull it over. Yeah, I had a 2,500 lot on the ES order book. And, kind of going back into our previous topic, which is, customers are still coming into these puts. Dealers are getting more and more short puts. So offers well supplied in the market right now. I think this sort of goes along with the theme of the prior days, which is sort of this bearish, this AM. We see a lot of wings and charms. So, the wings are going to decay first, right? Mm-hmm. So we're going to have a little bit of bearishness out the gate. And then once that sort of tapers off, we can see things sort of balance out, liquidity come back, and then we can start seeing better, more supportive paradigm from zero to T side. So I'm sort of still in the camp down here about 68.40. 68.40s is growing. 68.30s has drastically increased. We're starting to throw a little bit of these puts in the money now. So I still want to wait down here to about 68.40.
All right. So we're still waiting, but we did see a little bit of a bounce, but we're expecting to see a little extra downside. So Oliver, how are you doing?
I am great, although I just told you I'm very hungry, but that's another topic. So first of all, I'd like to sincerely thank you for the invitation. As far as I can tell, I'm the only non-native speaker in the room today, so please have a little mercy if I struggle to find the right words at times. But yeah, well, I believe
actually, no, that's not true, because on the panel we have a couple of non-native speakers as well. So
I see. Yeah. Okay. I'll take that back then. So I guess I believe I'm a Volland user since day one, at least it feels so. And I'm genuinely thrilled to be here today. It's been incredibly exciting to watch your development over the past few years and to experience it live. And I'm also truly happy to see that you've come out of this challenging period, not only doing well, but seemingly even stronger. So I'm really looking forward to all the new widgets and everything else that's coming in the next few months.
Yeah, we've been doing this now for 3 years. And even though we had kind of a hard time, we kind of see it a little bit as a cleansing, over those 3 years, you kind of think, oh, you know what? I wish I would have done it this way. I wish, if I had to do it over again, I would have done this. And one of those things was getting the Cboe feed. And they, after you're on, we're going to be talking with Henry from Cboe, and a lot of people came together to keep Volland going, and I am very appreciative of that. Yeah. So tell us a little bit, Oliver, about your how do you use Volland? What do what do you use? Like, what are your favorite widgets, or what setups do you have to start your trading? You want me to add? So I can add your screen to the stage if you need to.
Yeah, I'll let you know. Maybe first of all, you asked me before the stream what topic we could talk about today. And I think aside from the challenge of understanding the whole dealer hedging concept, which is already complex enough, as we all know, the most common questions I get from my clients is which data should they actually look at and which time horizon should take priority. And I think that's a completely fair and valid question. If we look at two simple Vanna exposure charts of the same market side by side, one showing only like 0 DTE exposure and the other showing perhaps monthly exposure or even all expirations, the first thing that stands out is, of course, the difference in the average notional exposure per strike price. And since the longer term view naturally incorporates more data, it's logical that the absolute monetary exposure per strike is much higher than in the short-term picture. So, however, what people need to understand is that it still doesn't make sense to only look at the all expirations chart, for example, if you're a classic day trader or even a scalper. In that case, completely different forces are at play. Think of it this way. If I'm a market maker and I've built up high Greeks exposure on a certain strike, I have to hedge that delta today because the option logically expires today. That means I have to act much faster and more aggressively than I would with an option that doesn't expire for another 2 weeks. In that case, the need for active management isn't nearly as urgent, even if the absolute exposure might be higher. And that's why, in my experience, it's extremely important for traders to look at the hedging data that's truly relevant to their own trading horizon, the data that has the biggest impact within that time frame. And I think only then can we really get the maximum benefit out of a platform like Volland. How do you guys?
I completely agree. It's all about what you feel comfortable with and what your time horizons are. I mean, Hunter and I are on here because we have separate time horizons. I mean, Hunter likes to look at order flow and 0 DTE things. I lose patience, and every tick will give me anxiety on my 0 DTE trades. So, I mean, what you said is critical too. And there are a lot of times where people ask me, can you give me signals? Is this a signal service? And I always push back because I say, even if I were to give you signals and I were to give you my trades, and they are successful trades, you see our hedge fund results. Even if I give you those trades, it won't be comfortable for you. Like if I'm doing a butterfly or, I made a joke the other day that I had a pregnant diagonal, right? The diagonal with a calendar that's in front of the short strike. Hunter loves the pregnant diagonal strategy. But but if I did that, most people would, they wouldn't feel comfortable, and they would get anxious, come out too early or come out too late, or they wouldn't understand the trade dynamics. I think that it is very important for people to practice what makes in the area that makes them feel comfortable. So
I think one thing that I might add there is that trading is one of those careers that really helps you understand like what you are as a person. Like a trend strategy may not be favored between everyone. Some people are really good at mean reversion. Some people are really good at trends. Some people are really good at momentum. And, that's just part of the equation. Then you come into a risk profile. Are you aggressive? Are you passive with risk? There's so many components that, one size doesn't fit all. That's what we were talking about earlier with the 0 DT dashboard. This is what works for me. And I think a lot of people need to figure out what is their style, discover themselves, and then wrap the data around who they are as a person.
Yeah, I totally agree. I think that's one of the main topics whenever someone is interested, maybe in one of our day trading courses. What I keep telling them is that trading, especially like order flow day trading, I think is a very individual thing. And only because one strategy XY works well for me doesn't necessarily mean that it works for someone else too. You got to find your style that fits your character, your day-to-day life, your goals, what you actually want to reach with trading. Of course, the money that you're trading, the account that you're trading. So yeah, there's a lot of different aspects.
Absolutely.
Yeah.
So yeah, Oliver, did you want to share kind of what you have right now as your setup, or?
Yeah, sure. If you want, you can share my screen.
Yep.
Okay, so I see myself as a classic day trader. I usually hold my positions between 10 minutes and 2 hours, I would say. The subtle difference, however, is that I generally don't trade directly in the futures market, but rather through 0DTE options. My setup for daily trading looks like this. At the top left, I have the 0DTE gamma chart. Next to it, the 0DTE charm chart. Although in my experience, charm has unfortunately lost quite a bit of its magic over the past few months, but that's another topic.
Well, hold on. Let's stay on that topic. Hunter, do you want to talk about the new Greek that's coming?
So
a new Greek.
Yeah.
So one thing that we note about charm is that charm is, delta's exposure with respect to time, and that's sort of like do the actual Greek itself, you'll see that charm is maximized at the 20 delta underneath, whether that's a 20 delta put or a 20 delta call, and that's really flares up in the money around that 70, 75 delta range. Delta is the strengthening and weakening of delta. Now, we want to look at this from a different standpoint. Is we could look at charm from a 1DTE perspective. There's going to be charm exposure. But when we look at 0D, we know for certain that that contract is expiring that day. And so we know that what is the real decay of that contract, and that is deltas have to either go to 0 or 1. And so what we're going to do is we're going to introduce a Greek that reflects that to say, here's the actual delta exposure that needs to go away before close, as we know that's a certainty. And so as we go up and down, we're going to see that, we're going to get sort of a new little distribution. The wings aren't going to be as wide. You're going to see a lot more at the money because, as you have a delta 40 trading at 3 o'clock, that's going to have a lot of decay. And, charm really isn't that influential at the money from like the actual charm curve itself. But this new Greek's really going to reflect that a lot more. So, what is the gamma risk? As these options are trading 40 delta, that either has to go to 0 or 100. So you'll see a little bit of spike at the money, but then the wings those will decay really quick. So I think it'll give a little bit better view on what true deltas have to decay and to close.
Yeah. So basically, as you said, charm can kind of be a little bit misleading. And we see right there in that call, in that puts and calls charm above the money, we see these big numbers. But if we actually looked at the option chain, and you're like, that's a huge number for a 10 cent, 20 cent option, right? Like that's not going to do much for you. So that's why we're introducing kind of like a delta decay, giving you the exact number of deltas that have to be hedged at this price if we were to like expire right now. So
okay.
So I know we didn't talk about that before, but that's another Volland improvement in Volland 2. And that's coming very soon. So
I love the idea. I like how you guys adapt to the market situation. I mean, last year, I remember like mid of last year, we set up our charm and we had our paradigms. We could set up a trade and we had extremely high hit rates with just trading charm. I told you, I think when you've last been guest at our podcast, I told you basically in the evening, I think I don't even need a price chart and all. I just need my charm widget. I can trade that. And things have changed a little bit here. So I'm really excited to see the new stuff here.
I think the main thing that has changed hasn't been anything with Volland. It's been with the pricing that we've seen in markets. The wings have gotten a lot wider, and that's part of the reason why I think charm has kind of been a little bit altered, because back when I was looking at charm during the white paper and stuff like that, the wings were a lot shorter. It was very low vol time. So it was, you could almost say it was easy, right? But now the wings are very wide, and you can see on your gamma chart too. Gamma is all over the place now. There's a lot of people that are doing some more exotic positioning, condors and verticals all over the place on SPX now, especially in 0DTE. So that's why we've kind of decided, all right, we've got to adapt. We're gonna show this kind of different view of what 0DTE delta has. So, all right, so go ahead. We see Charm there, and we see Vanna. We will also see soon this new 0DTE.
Oh yeah, I just added that. So, well, below that, I have what I consider to be the most important charts for my trading: the 0DTE Vanna chart and the cumulative 0DTE Vanna chart. This is where I find the information most relevant to my trading decisions. On the right-hand side, I also have Vanna exposure chart for the next 5 trading days, including today, as well as the same chart in its cumulative version. And as you just said, at the bottom, I've added the 2 new widgets, and I'm really curious to see what kind of statistical results they produce over the coming weeks. In general, my team and I, we're statisticians, so we love this kind of analytical tools. We'll be collecting and evaluating plenty of new data in the near future, and I'm genuinely excited to see what you've built and how the informational value of these widgets will evolve over time.
Yeah, I mean, so we're looking at the quad screener right over here. We talked about that a little bit in the last stream. Basically, you can you have SPX up there, and so you have 1 dot, but you can go to your edit, and you can add a bunch of stocks on there, and that'll give you one place where you can look and see where all the tech stocks are, where all the big, and you can see some dispersion there. I think that's going to be helpful on the 0DTE side. SPX, I mean, what this is trying to do, I mean, again, VolHacks are for a little bit of a shortening the learning curve for new subscribers, right? It's kind of a little bit of a crutch. And you, as an experienced Volland user, you might, find like, oh, basically what I'm saying is trust your analysis over the VolHacks. That's like an algorithmic analysis. But this is kind of giving people an idea. Where is the strong support? Where's the strong resistance on each stock? If you go and add to your workspace, you're going to see 2
I can't because this is just a screenshot. I can't add anything here.
Okay. Well, later on though, if you add to your workspace, you're going to see 2 extra widgets. We're going to see that over-vixing, under-vixing, the vol event widget that we just put out. And remember, we had that Vanna inertia thing that was showing kind of like the impact of a catalyst. That is now a VolHack, and it kind of gives a gauge. We're going to go over the VolHacks later in our stream with Samantha LaDuc. So, and that's at 2 o'clock. Can you give me like an example of a couple of your favorite like trade plans? Like when you see this that you have on your screen, what action, what is your plan?
Yeah. Okay. So I'm going to concentrate on the kind of information that Volland delivers, because if we dive too deep into the order flow stuff, that would just be too much for the 15 minutes that we've got left. So let's talk a bit about my Volland setup. So my first analysis of the day always takes place during the overnight session. That's not only because I'm based here in Dubai, but also because the overnight session provides an extremely reliable outlook on the daily bias, in my experience. Of course, later on, I closely monitor the minute-by-minute exposure and how it develops throughout the day, but my initial base analysis is always based solely on the pre-session data, and I've had great success with this approach for years. In general, I focus on 4 key aspects within the exposure charts. So first is strike prices with unusually high exposure. I think that's fairly obvious, I think. Second is the shift and development of that exposure over time, which only becomes relevant later in the cash session. Third is the outer boundaries of the exposure distribution. We just talked about that. We used to have a lot narrower curves in the past. They've spread out quite fairly in the last weeks, I would say. So this might be a special point. And the fourth point is, in my opinion, the most important aspect, and that's connected Vanna clusters. Those are or let's go through those 4 points. Like strike prices with high exposure can act as magnets or levels of interest. We all know that, which, by the way, is also why we named one of our software tools level of interest. These can be price locations where I specifically look into the order book, look at the order flow for possible trade entries. What I also find extremely useful is to look at the outer edge of the exposure charts, what I just said. In other words, the strike prices beyond which there is no longer any significant exposure, like here or like here. We can treat these as a kind of expected move boundary, especially in the 0DTE space. In this screenshot, for example, we can clearly see an abrupt drop in exposure below the 6,750 level, both in 0DTE Gamma and Vanna. This allows us to assume that informed market participants have mainly traded options up to those strike prices, making it relatively unlikely, at least based on the current data, that the price will move beyond that range. I mark these overnight session boundaries as strong lines in the sand in my chart. When prices reaches these areas, it usually encounters support or resistance, depending on the situation, depending on the context. However, my most important, I would say my most important filters are the Vanna clusters I just mentioned, which we internally refer to as Vanna bull zones or bear zones, even though that terminology isn't always perfectly accurate in every market environment. Let's take, for example, this green connected Vanna cluster up here between 6,895 and 6,925. Here's the logic behind it. When customers sell calls up here, for example, it forces the dealers into out-of-the-money long call positions. Those are fundamentally bullish trades. To hedge their delta, they have to sell the underlying. That in turn creates positive Vanna exposure. Why? Because Vanna measures what happens to delta when implied volatility increases. Think of it like this. When volatility rises in an out-of-the-money option, the probability that it will move into the money also increases, regardless of whether it's a put or a call. Consequently, the delta of our call would increase as volatility rises. Therefore, the Vanna exposure is positive. However, assuming a stable spot-vol relationship, volatility should decrease as price rises. That in turn reduces delta, which means the dealer has to reduce their hedging position to remain delta neutral. Since it's a short position, they must buy back, which has a bullish effect on the price, making it easier for the market to rise according to Vanna, regardless of Gamma. As I mentioned earlier, the terms bull zone and bear zone, they aren't entirely scientifically accurate, since of course there are other Greeks that play a role here, and the spot-vol relationship isn't always intact either. However, our statistical analysis and researches over the years have shown a strong correlation between those Vanna bull zones and rising prices, and as well as Vanna bear zones and falling prices. We can naturally take advantage of this correlation in our day-to-day trading context, and that's what we're doing in practice. Based on this logic, directly below the Vanna bull zone with positive Vanna that we have here, in our screenshot from yesterday, we find a Vanna bear zone which connected negative Vanna. Let's take a look at yesterday's chart as an example. I've got that here. Let me check. At the beginning of the cash session, the market first moves in a rotational phase, respecting the current weekly VWAP down here, here. And after that, the price begins to rise. But then as price moves into this red area, the Vanna bear zone I just mentioned, implied volatility drops due to the rising prices. Since negative Vanna is positioned above the current price, this causes dealers to sell, creating resistance against this upward move. Therefore, it was to be expected that after breaking above the previous day's high, the market wouldn't go much further, which is exactly what happened here. The overnight levels held perfectly. And what we also keep a close eye on are the edges of those Vanna zones. I think, let me check, you can see this quite clearly. Yeah, here in yesterday's NASDAQ futures chart. During the pre-session here, the price moves into the red bear zone and is subsequently bought all the way through it. Sorry, it was sold all the way through it. The moment the market reaches this lower edge of the bear zone, it finds support. Volatility decreases here, and the positive Vanna exposure below the price provides support, causing the market to reverse direction. Price bounced exactly from this blue level here, which we refer to as the CME span risk interval. And once the market has fully moved through a Vanna zone, we very, very often see it travel back through that entire same zone in the opposite direction, either on the same day or shortly thereafter, as was the case here yesterday in the NQ future. So this would have been a price location where I would have looked deeply into the order book to find possible trade entries here. But also the moment that the market breaks through certain levels, like the yesterday VWAP close here, I tend to look for pullbacks, for example, here in the bear zone, check the order book and try to get my entries in the short direction in this case. So that's basically my approach and how I use the Volland data. I first mark certain lines in the sand, levels of interest. I build up a daily bias. I make up a plan in the pre-session, in the overnight session, what I actually want to trade and where I want to trade. And as soon as the market approaches one of those levels, I look into the order book to find possible trade entries there according to the plan I made earlier. Of course, as I said, I always keep in mind the shift of the Vanna during the day. So, of course, I also have a close look at the live data. And in case anything changes, of course, I adapt to that data. But basically, yeah, this is what I'm doing, and this is how I approach my day trading. So as I said, I do not directly trade the future. I find it personally much more easier and much more comforting to enter my trades in the 0DTE markets, in the SPX, which gives me a lot more advantages according to theta decay and stuff like that.
Yeah, absolutely. I'm looking at kind of your trade plan, and you guys at TradeNeon are statisticians. So I mean, you're back testing and you're looking at all of these setups coming in all the time, right?
Yeah.
Whoa.
Oh, sorry.
We entered the matrix there for a minute. Yeah, I mean, one thing too, just to kind of showcase it a little bit, I'm going to share my screen real quick. We have a spot vol widget, spot vol betas, it's called, that, when you were talking about making sure that spot vol correlation is being adhered to in the market, which means that, by the way, market making is very healthy when it's adhering.
Yeah.
We now have a widget that will tell everybody, hey, we're over VIX, we're under VIX. It gives you the value that we're over or under VIX. So, in this little range here, when it's yellow, 0.28 over, we're over VIX a little bit, but that's very healthy range, right? So now you could add that to your screenshot.
I'm going to do that later.
Well, now it's actually a 0.01. So we are about as VIXed as we possibly could be. That's pretty good. So yeah, I think that is a great trade plan. I mean, even, kind of from our studies and statistical studies, that adheres very well to what we find, and those Vanna zones, like you said, those zones are critical. One thing, it's something that kind of changed recently. We've seen a lot of premium selling on the wings, especially. Tell us a little bit about if that changes your trade plan. Before, we saw a screenshot where the wings in the overnight were sold premium on the put side. And yeah, so I mean, like, does that affect your trade plan at all, or what do you see in that?
It does, because usually what makes total sense is that in the overnight session, those wings are much farther away from each other than they are later on in the session. Oh man, now that you talk about it, I could have prepared another screenshot for that, because that's really interesting information too. What I am doing is that I am drawing those outer boundary lines of Vanna and of Charm in my chart I would say every 30 minutes. And that fact alone can tell me a lot about the shift in the dynamics of the market. Let's say the market is ranging, for example, and we've got quite a narrow boundary, quite a narrow range of like the outer boundaries of the Vanna exposure too. And then at a certain point, the upper boundary of that range, of that Vanna range, moves up quite significantly without the market following that move immediately. That's a strong bullish sign for me. If I see that, and I see the market, for example, moving up to a line in the sand to a certain level of interest and breaking through it, this would be a very interesting point for me to check the order flow and to look for a possible pullback trade to that breakout level. Because usually, at least in my experience, the shift of those Vanna boundaries and also of those Charm boundaries is kind of a nice indicator that could tell you about following market movements that are about to come up. Usually, which is quite interesting too, Charm usually had a much wider range than Vanna originally had. That also kind of shifted. Nowadays, I would say the Vanna range might be the narrowest of them all. Gamma, Charm tend to be no, sorry, other way around. The Vanna range increased quite a bit, while Charm and Gamma decreased in relation to that, which is quite an interesting phenomenon in the market. So absolutely, that's an absolutely important factor everyone should keep in mind and should have a look at.
Yeah, I mean, I think one thing too about Volland is all the time, especially in 0DTE, institutions, there seems to be like new institutions that come in and change everything. You know, before, when we had the white paper, it was very, the paradigms worked very well. And then shortly afterward too, paradigms worked very well. As you said, you just set and forget almost, right?
Yeah, absolutely.
And then all of a sudden, it's not like the paradigms don't work anymore. It's more institutions have changed how they traded. And now there is, for some reason, the pricing has gone a lot farther on the wings, and institutions started selling those wings pretty heavily. And I think that's kind of an interesting dynamic now. When we were looking at Hunter's view before, there was a clear cutoff between where institutions are buying puts and where they are selling premium. So I think that some of those dynamics are interesting. And if you don't pay attention, you kind of don't know. You could get caught off guard by strong moves in the market because of it. We talked a lot about your 0DTE trading. What do you look for in your swing trading? And does that impact your 0DTE trading? So let's say, in 0DTE, you're kind of bullish, but in your swing trading, you're bearish. Do you, kind of do both trades, or, how do you what is your swing trading style like?
Okay, so in my swing trading, I mainly trade commodities. That's what I come from as a precious metals vendor. So I think there might be some new features coming up too, but you surely talk about that later. So what I keep in mind as you've just seen on my screenshot, is the exposure charts of Vanna of the upcoming week. And that kind of defines not which direction I will trade in today, but surely how much space and room I give to my trades. So if, for example, I see the weekly chart being completely aligned to what the 0 DTE data is showing me, I tend to hold my trades far longer and even build up positions over time. While when the two data sets kind of contradict each other, so I've got a bullish picture in the 0 DTE and a more bearish picture in the weekly chart, I kind of go for more short-term trades. I manage much more aggressively than I would with aligned pictures.
I see. So, you know, as you kind of alluded to, you do a lot of swing trading with your commodities. Volland, I think we're estimating right now in the new year, right, in Q1 2026, Hunter, kind of, is that a good estimate, you think? We're looking at releasing all of our futures. So we're going to have equity futures. You know, if you like commodities, Oliver, for you, we will throw up gold and silver.
That's gonna be a game changer. I love that.
Rates will be, you know, we'll roll them out one at a time. I think, you know, equities are easier, so we'll probably do those quick. You know, VIX, volatility, currency pairs, you know, those are kind of going to be later because they're a little bit tougher. But yeah, so I think that you're gonna like those as well. So.
A question for you on that point. Yeah. From your experience and what you know, is the whole dealer hedging phenomenon as strong and as valuable in the futures options markets as it is in the equities or in the SPX?
I'll speak first. I mean, first of all, we haven't yet received those trades in the Volland style yet. We don't have the trade level data. However, when I look at OI and I look at positioning, I think it might have more of an impact than even equities. And the reason why, I mean, especially SOFR futures, overnight federal funds rate futures, there is way more open interest in those than there are in even in like SPX. Yeah. I think that, and I also think a lot of that open interest is banks trying to hedge their mortgage. You know, they issue a mortgage, they hedge with a bond, and then they hedge that with a future, you know, with a future option. And so I think there is very heavy, not only institutional, but price agnostic trading in futures options, especially in like rates. And also in certain commodities like ag and stuff like that, which I think Hunter knows a little bit more about than me. So I'll defer to you, Hunter. What do you see as far as open interest in those futures?
Yeah, so the first thing that's going to come with that is that dynamics will be a little bit different as the products do change a little bit. We can look at ES being a lot more fungible overnight, but ES also do carry American expirations and European expirations. Now, when we get to a different space, let's talk about CEL, for example. You don't have that calendar arbitrage. You have monthly expirations where, you know, those calendars can trade negative depending on the deliverable of the CL contract. And so as far as dealer dynamics go, I think we're going to have a little bit more of the risk to these different contracts. You know, what may be supportive in the front month is not necessarily supportive in the M2 or M3 of those contracts. And so there's a lot more data that needs to be had for those, and there's a little bit different assumptions that have to go into it. I think ES, as far as like overnight trading in ES, I think that's going to be a very valuable source. One thing that's really big now is that we do have SPX overnight, so that helps understand, you know, where current 0 DTE inventory is. But as something that's more, I consider that ES is a little bit more liquid in the overnight market, as it's something that's trading. It's very fungible. That is to do SPX. SPX, they quoted a little bit wider. They're all European. So excited to see the data. there are a lot more information that I would need to do to break that down a little bit more. What's the difference between fungibility, liquidity needs? I think overnight market's going to have a huge impact. I think, especially as we go into like EIA reports or crude oil, that's going to be really big. Seeing how they shift the vols, where they shift into M1, M2, M3 at, what can we expect about these different deliverables? I think it will open up different opportunities outside of, hey, let's just trade the front month. With ES, it expires every 3 months. So it's like, okay, we're kind of forced here. Even with gold and even with the ags, I think we're going to have a lot more, like Jason does with earnings, right? We get those ag reports very frequently. We get those EIA reports very frequently. I think Vanna will have a very large impact on the commodity side.
Yeah. Just quickly, someone just wrote, I need lean hog futures. I love that. I love lean hog, actually. Very nice day trading market, by the way.
I would do lean hogs any day over natural gas. That thing just moves way too. That's the widowmaker. Is that gas?
Well, first, before that one, I wanted to highlight our boy Johannes, who comes into our Discord. Loves to see another German in town, right? Unfortunately, now Oliver lives in Dubai, so to give him a high five, you got to travel a few countries away.
He still speaks German, though.
Yeah. Volek thinks he's loves your style and how you trade. So that was good to see. And then he also has another question for us. Do you think dealers hedge their positions in the futures market instead of 0 DTE options themselves? I'm supposing you're talking. We just talked about commodities and stuff. I think what he's talking about is ES against SPX options, right? And the answer to that is yes, that's what they do. They hedge using their ES. You can't, they try. I think like the first thing, and we'll talk about this in the next segment. I think the first thing they try to do is try to just offload their inventory. They get a call or something like that. They're now long a call. They try to sell it, so they price to incentivize that. But yes, that's how dealers hedge SPX is ES. Do you guys see anything different or?
No, absolutely. I mean, this is the very reason what futures are made for. So it absolutely makes sense what you just said. Yeah,
absolutely. All right, before we go, Hunter, is there any kind of update you want to give or?
Ironically, we still have the same view as we did the first session. Customers are starting to still buy these puts. We're still seeing a lot of downside, a little bit of reversion off of the 40 level, but I still would like to get right in here in the meat down here to 65 or 68.30, 68.25. Sorry, I get a little dyslexic, but yes, we're starting to really strong paradigm going to the afternoon session. I think we're going to have a strong PM session, but as for it is for the morning, I think we're still going to get a little bit more downside. We're not seeing flows shift back to risk on yet. So, but this is starting to form a very good line in the sand down here by 68.30, 68.25. So this is the area I'm really interested in today. Then of course, working a position, then I really want to work this up back here to 68.80, 68.75s. We don't always hit the target, but any sort of upside I'm happy with.
All right, cool. Oliver, it's been a pleasure having you. Thank you so much for coming on.
Thank you.
I appreciate it. And if anybody here, give a plug for your TradeNeon.
Yeah. So if you'd like to get in touch with us, you can find us at TradeNeon.com. As mentioned, we offer various software solutions for both day trading and swing trading. I think for many of you, our software level of interest will likely be of particular interest. From my personal point of view, it's the perfect complement to Volland. Every day, based on our own market analysis, we provide you with fresh market insights and key lines in the sand from the overnight session, which you can synchronize directly with your charting software, TradingView, Atos, Bookmap, NinjaTrader, whatever. We include volume and market profile data, dark pool data, CME span data, VWAP data, and of course, some important dealer hedging lines in the sand too. And we're also currently working on the English version of our dealer hedging course. I think many of you are probably still at the beginning of your journey in this area. And I remember very well that what I wished for most at that stage was a structured and in-depth course that would guide me through the entire topic step by step, with lots of practical examples. And that's exactly what we already offer in German. And I believe that we'll be able to release the English version by the first quarter of 26. So that you can gain an even deeper understanding of Volland and the valuable data the software provides.
All right. All right. So thank you, everybody, for joining us for this segment of Volland Refined. And thank you to our guest, Oliver Sparring of TradeNeon Academy, for joining us. If you're watching this on YouTube, you can go to the description of this video to get the links to all 8 segments. Don't forget, you can subscribe to Volland at whichever tier is best for you at www.vol.land. Thank you, and may Volland help you in your future trading ventures.